Hi, very good morning. Welcome to the Pat Training video. The video yesterday, I talked about accumulation, manipulation, and profit release. Seems like that was a super popular topic. That video got quite a lot of views quite quickly. What I'm going to do this morning is I want to sort of do a continuation of that, but we're going to be looking at, again, what took place during a particular move and the things you need to be looking out for. One question I did have where somebody talked about drawing lines through shapes. Like he talked about a candle pattern, a candle chart, and I put a comment on that. So if you want to go back and check on the comments under the video of yesterday's video, which would, sorry, not yesterday, it's the previous day, which is 12th because I went fishing yesterday, 13th, then you'll see how I commented on that. But just briefly, the difference between the main difference when you're looking at Pat software and when you're looking at the candle chart is the belief lines. Now, I'll just quickly show you what I'm showing, just to recap on that, just in case you're new here, you don't know. Belief lines, Pat doesn't take any particular notice of the open and the close. It just, as far as we're concerned, that this is a constant stream of data. If we put an open and a close on a bar, we're just arbitrarily doing that depending on what particular time frame we're in. With this particular chart frame, we're in 15 minutes here. If we took a 30-minute chart and put it against a 15-minute chart, the candle bar would be different. The open and close will be different, and that would change how you looked at the market. So we don't pay any attention to open and close. We treat data much more like it is, which is a constant stream of data, and we make meaning out of that, or try to make meaning out of that, and then make money from that. Okay, so getting back onto what we're doing this morning. Again, we've gone over this. You can see this is where this is the previous day, and I've done this because I missed the day. I was out fishing, as I said. So this is where the line would be drawn through here, and I want to run through this, what happened here, and trading opportunities. Okay, so the first thing, the first thing I want to look at anyway is I want to know if there's any backstory to anything. Before I consider a trade, I want to look at some backstory. What is going to give me some evidence that this trade is the trade that's highly likely to work out? And that's what I'm always looking for on every trade. Now, people say to me, why don't you just get Pat to highlight these jump bars, which is like a bar like this, where you can see the belief bars here, and then the next bar, the belief bar comes up to here. So there's this gap, if we like, between these two bars. Why don't you just get back to highlight these? Well, we could do that very simply, and that would be a great misleading thing to put into a piece of software. And the reason for that is because it would flag up every one of them. It would pick up these, it would pick up these, it would pick up all of these, and there would be indicators everywhere because this goes on all the time. We're not interested in all the time. We're only interested after there is some backstory to this. What do I mean by backstory? Okay, so what we see is when the market opens in the morning, we see the market moves up a little bit, it comes down a bit, and it starts to move down. Now, if you've already got on, I'm going to get rid of this so I can move the trend line, because the first place you'll be looking at your trend line is something like that. Okay, you can see the market clearly jumped up from this point here. That point there, you can see where my cursor is there, jumped up from there. So that might be a point where you would look up there and say, okay, well, that's the first line. The market then comes back down through here, and here's a jump bar down through here. Let me just call up a marker on that so we can see. So there's a jump bar down through there. Okay, there we could sell the market through there, and that would be great. Well, in hindsight, yes, but not really, because the market starts to go back up. Now, if we're looking at any market move, invariably you will get a retrace. In most cases, you will get a retrace. What I want to see is a retrace that gives me some backstory. So when I see this occur, let's just move this now. My next place that I want to see, which is a really nice, clear turn, which is, of course, there. You can see what I've done there. Let's just call that up again. I have placed my trend line onto here, and I can now see that the market then moves clearly away from this. And that gives me a good indication of that's a sort of a retrace there. That could even be the start of a move in a continuation up. We don't know this on there. So what we want to look for is getting back to our backstory. Once we see the market come down through here, and you see it come back through, breaks through the trend line, and we get this jump bar down through here, I'll say, okay, well, if this is going to be a trend line break, if this is going to continue on down, where's some backstory? Well, first off, I'm going to be looking here. Any traders that sold down here, convincing that they were in the money, they were doing great and that's the right thing, what they would have done is put their stop losses, most of them would have done, is put their stop losses back down above this point here. So their stop losses sit up here. As the market moved down, some of them would have indeed moved their stop loss down. You can see we get a little retrace through here. More traders would have put their stop down there. So the idea is to lock in a profit. This concept of we're locking a profit and then the pressure's off, that sort of thing. This often happens when traders are not really sure about what they're doing. So they're just looking to lock in a profit, minimize the risk of every opportunity they can get. And of course that sets them up for taking out stops, and then the trade goes on to make money. Well, the trade would have gone on if they'd left the position to make money. Would have, could have, and should have, doesn't pay the bills. Okay, so knowing this, knowing what would have occurred down through here, and you don't have to be a rocket scientist to understand that. I mean, you yourself have probably done this many times. I did earlier in my early years, looking to where to put my stops and looking for these tops and bottoms, these little turns where I could put them in. I see the market come back up. Now this all makes sense. So this break down here and this jump bar down here now makes sense because we can see a stop take has taken place through here. That bar there punched out the stops, drop back through, and then we get into a selling situation down here, and then the market carries on down. So that's what I talk about when I say about backstory. That is what I'm referring to, is understanding what is behind this. If I can find a reason, this manipulation, this manipulation coming down through here, this manipulation going back up through here, if I can find a reason for this, then I'm very interested in taking that trade. And that's what you need to look for when you're looking at anything. So see down here, we've got this jump bar up. But yeah, I can't see a lot of reason going on as to why that is going to actually tear off up from here. There's nothing there. So we get into that move and that's it. So let's just move on quickly now to the next day, which is the day I wasn't here. So here again, we've got the Pat's put this in for us. So we'll get rid of that. We'll leave that one on there, put another one on. Just as easy to do that. Okay, let's have a look, first turn to the next day. Okay, so we can say, oh, that's a pretty good one. Okay, that's all right there. On there. Well, let's just back up there a little bit, actually. Okay, so we could say, right, there we go. There's our first drop down through there. Now, immediately, what shouts alarm bells at this one is that Pat would have put in these green blocks. You can see the green blocks that you see here. These here, Pat would have put these in, like I say, before the market gets there, puts them in. So you know that something is going to happen. When the market gets to this point down here, you know that something is going to happen. So that alerts you to that. How is that? What is going to happen in that relative to what you might be looking for in terms of going long or short? And then we see the market comes back up again. I'm here. Okay, now what we would do is then say, okay, well, let's just have a look how this market moved from here. Just move that. Sorry about the delay. I'm there. Okay, so that's, to me now, I'd say, okay, well, that's interesting. We've now got a down trend line here, but the market's going up. Okay, so I'm just going to leave that there and see how the market plays out, see what's going on. Okay, so then the market moves up, so then I'm going to follow this up. Okay, seems like now we have this uptrend, so the market's coming off of this area at the bottom. Let me just give this mark here. So the market's clearly come away from here, come away from here again. Where do I get in? Okay, there's still nothing there really saying that I should be getting into this market. I'm not convinced about this. Okay, so we had another point here. Now I could move this down. Could move this down to here. Okay. I see the market coming up. Okay, now the market's broken down through here. What's likely to happen through here? Okay, what do I see? Pat's put in blocks again. So as the market comes down, I know that this is not going to be easy. This is going to cause some issues. What's going to occur out of here? What do I see? The market comes down, has 3 probes at this, 4 probes actually at it. Goes up, strikes into the trend line, down again, and then bang, 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 and through. And this now tells a story. Where's the backstory to this? The backstory has come all off of this. It's now broken this to the upside. So all this here now ties in with why we would want to consider this break to the upside here. Okay, and that's it. That's what I say when I'm looking for backstory. I want to understand, or try and understand every time I take a trade, is why am I doing this? Where is it coming from? I am not looking at a bar. I'm not looking at just at a jump bar. All the time this is in my head. Backstory, backstory, backstory. Unless you have that, you don't understand. It's a bit like, reading part of a novel. You open it up somewhere and you read this particular scene, but you have no backstory to where it came from. So you can't put it into context what it means. If you then went back and read the backstory and then you got to the scene, you say, oh, okay, and now I understand why this character did this. Now I understand why this character did this. And then you can go forward and understand the ongoing story, the future part of the story. As you get to it, it'll all make sense. And so exactly the same with trading. Look at your backstory, understand why you take each trade, and the whole thing will change for you. You will no longer be bar watching, looking at this bar. Is this bar going to do this? Is that bar going to do this? You'll have a backstory as what you're doing. It'll give you a lot more confidence about what you're doing and for taking each trade. Okay, so that's it for now. It's going to be it for the weekend. We're coming up for the weekend, so I will catch up with you early next week. Take care. Have a great day.